Welcome to Trading Lounge and the European indices for the 17th of November. So, the DAX on the daily chart here, there's some things I understand and some things I don't. So what I understand is that we have this as a corrective move here. That means it will be taking out this top here in due course. The logical count would be looking at wave 1 and 2 and 3 and 4 and 5. We can see that the market's vibrating at 13,000, which is a major trading level here. I would expect wave 2 to have a bit of a pullback here, a bit more than what it's got here at the moment. So I've got a problem area in here. So we're going to go in and have a look at some different counts. As an analyst, we'll look at those different counts. As a trader, we need to take the trade setup. So we'll also be looking at that. So a trader needs its own hat and an analyst needs its own hat as well. So just be mindful of that. But we're going to go in and have a look at this mess here. And let's go into the 4-hour chart to start with. And this is what we're originally looking at. But as I mentioned yesterday, it's something that I don't particularly like because we're not really seeing the wave 2 pullback here as such. And also too with a wave 2, it should be just as, at this degree of structure, it should be just a zigzag. So coming to the high up here would see 5 waves coming down here, nice and swift, sharp, very sharply, and then a B wave moving up in 3 waves, and then another 5 waves to the downside here, pulling back closely to the 50% mark, or 61.8%. Anywhere between 40 and 99% really, and then moving up from that point. But we're not seeing that. We're seeing a market that's moving sideways, and I thought, well, yeah, I could work with that too because we're at a large number, and I know markets stick to large numbers, but it's just not feeling right. So we've got a situation here that we need to readdress this this particular pattern here, as we talked about yesterday as well. So we can redress it in a few ways. We're going to go in and have a look at those different ways, and then we'll look at ways that we can go long on this market. So we could probably go long on this top here, for example. But going into the hourly chart here, one way to view this here is looking at this, instead of this being wave 1 over here, we're looking at, I mean, it's quite possible to start with that. Let's copy this. It's quite possible to have that as wave 1 here and wave 2 here, right? And then we're just moving up. We'll just move up quite strongly. So that means that we need to trade long on these highs here. We'll get back to that. But one of the patterns can be wave 3 here with an A and a B and a C for wave 4 here, and going up for wave 5 here. So we can count 5 waves to this little structure here, and then looking at this as an A and a B and a C wave into this point, and then we just go straight up from here. Okay, now in terms of going long here, I can point out that from the top to the bottom here, the 13,200 is the 61.8%. So if we get support on that, this is all of group 1, 100, 200, and 300. If we get support on top of this level here, on top of the 20, then a nice tested support, then we can look to go long at that point. But would need to be looking for a classic trading levels pattern. So that would play out here. If that's the 13,200 here, we'll see the arrival. But remember, this is the 50-60% retracement level as well. And we'll zoom in on this in a moment, but would still need it to visually sit over here as the tested support before you can go long. But that first high above the level, your reference point, and the second one and the third one, they're all entry points, okay, on that 13,200. So it's possible to count 5 waves to that point and look at this as an A and a B and a C as a expanded flat correction within wave 2. A little bit iffy, but it's doable at that point. As one of our members pointed out, David, he pointed out, had a nice chart. I hope he doesn't mind me showing this, but I think it's all good for everybody to put themselves on stage now and again. So he's got this nice count as an A, B, C, and D here and E here. So we'll have a look at that. We'll break that down in a moment on maybe the 15-minute chart I looked at that with. Okay, yeah, I did it here. So this is David's count. So it's quite good actually, because most of these structures here can be counted in 3 waves here. And like I said, I can count this as 1 and 2 and 3 and 4, and then 1, 2, 3, 4, 5 here, as we were counting yesterday. So we've kind of got, we've got 5 waves there, which I've labelled as wave 1, and we've got this as an A and a B and a C here. This move here, coming down here, so a C wave, a D wave, and an E wave over here. This move down here is 5 waves. I pulled it apart, okay? So the 61.8% is back at the 50-60% retracement level here, and then down from that point there. We can have a look at this on the tick chart. I think it's just worth pulling apart. So just remove that. I'll just bring in a little bit more data here for this to squash it up a little bit. So my focus was just on this move coming down through here for this. So we can look at this as a 5-wave structure, 3-wave structure, 1 and 2 and 3 and 4 and 5 here. This is a little bit tricky here, but we go from 4, go 1, 2, 3, 4, bit dodgy taking that top out there, but 1 and 2 and 5 waves, 1, 2, 3, 4, 5 here, and then 4 in here and 5 down here. So it counts nicely as 5 waves down. So in that instance, the 61.8% is at the 13.2 here. So that's why looking at the classic trading levels pattern sitting on that level is really quite important at that point, because that will be your long trade to the upside. There, that will verify this, and this move up here will be, if I can just copy these here, I mean, it could be impulsive, but we just need to look at it. We need to look at, it's good to look at both sides, I think, and then it's okay having 2 counts, because then you can just like go, okay, well, that's cool, but where does this, at what point are we wrong, with these situations? So, and it's not really a matter about right or wrong either. It's really about making money, it's about solving problems. So we can see that this is impulsive. We can see this is impulsive and not finished. So that's going to take us much higher up there. So if we get 5 waves up here, it might be a little bit difficult for you, but either way, we'll look for that classic trading levels pattern. So this will probably get up into that space, and it can roll. It will react from that point there anyway. But if we see something like this, the arrival, the reaction, the first high above the level, and then the A, the B, and the C wave here, well, then these become your entries on the long side here, okay? And it's also going to be tricky too, because if we look at this, if I can just see, I can't draw on this side of the tick chart. I can only draw on the other side. So from this low here, if we look at this wave A here as wave 1 and 2 here, that A and B here, then this is making way for a nice 3rd wave here, and that will be the 4th wave and the 5th wave coming up to here. So this will be the ABC pattern here. So you might be able to track that and get in a better way at that point as well. So yeah, look, just shooting the breeze, but yeah, just coming back to the 15-minute chart here. So Davis count can be on the money, and if he's right, well, that's fantastic. We can look to pick it up at this point. Well, that means really going long on this to be a safe trade back up here on the B wave here once again. If it fails here and drops back down, if at the end of the 5, we'll get a bounce off this level, so it might be worthwhile just buying on the 13,000 and then having a close stop, and then working it up and going long on the 100 at that point there, as well as a tested support. And that's what group 1 is for, building in on 1, 2 and 3 here. And if you get support on 3, a nice tested support on 3, well, then you're going to 5. Because once you get support on 3, then the order flow will stop being pulled by 13,000. It'll be pulled by 500. I just keep it simple by 5. I like to keep things as simple as, ABC 1, 2, 3, 4, 5, that sort of stuff. So we've got that. We've also got, if we go back to the hourly chart here for a moment. Oh well, that's my other count here. We just go back to the 4-hour count. So in this case here, we also want to be long on that, the same place we were going to go long on the 15-minute chart on here. So tested support on top of the 200. And then we also just need to be mindful of the previous count here, where we don't take the top out here, we can look at this as an A and a B and a C wave, not counting very well for that at the moment, and then dropping down from this point. So look, we've covered all bases, but at least we know at what point we need to be long and at the moment. And the S&P is pushing up nicely. It's leading to the upside. So we can be pretty much assured that the DAX will at least get to the 13,200. So it's all about finding support at that level there for that. Alrighty, I'll just leave it at that. The FTSE's in the same boat, so I don't need to look at that doing exactly the same thing, so I'll just leave it at that. But just one other thing here as well. It's kind of important. Let's just go to the daily chart if that's okay. So just sort of rehashing this in a way, it's possible that wave 2 is already in play here. So it's kind of important to build into these long trades. You don't have to do it excessively, but in small ways, building in on 200, 300, 400 and 500 and building that way, and we'll manage that risk because we've got this third wave. We're going to be going from 13,000 to 15,000, right? So we don't want to spoil this, you know, we just want to build in lightly, but we also need to be mindful now that this is just not a fourth wave here and we're going to make one more high here and come back into this area. So we got to get past those little 5 waves in that structure. So we don't want to overtrade at that point. So I'll tune back in when we get to this point here, and we'll assess where we are at that point and take it from there. So just recapping this, we've either really got wave 1 and 2 sitting in here, or if we've got David's triangle pattern here, then we can look at that being wave 4 here and going up to wave 5 to make wave 1 here and 2 here, because triangles don't happen in wave 2, they only happen in wave 4, so that's why we're looking at that as wave 4 there. So yeah, that's it. Okay, thanks for tuning in. Cheers.